All right, take 534. Welcome, everybody. All right, so there was a request last night for me to go through some kind of like basic charting. So I just picked INOD because it had earnings yesterday. Like if I turn after hours off, you could see, it had earnings. That's with after hours on. So obviously big move, but how could we have kind of timed a potential entry here? All right, so I'm going to take after hours off. All right, so the first thing I want to do, obviously this isn't a downtrend, right? I don't think anybody would argue with that. So the first thing I like to do when I'm looking at a chart is, and I'm on the daily, let's go up to a weekly chart, right? The first thing I'm going to do is I'm going to map out the main levels, right? So the first thing, and I don't work off of wicks, I work off of bodies. Right, so here's your body, here's your wick. I'm gonna go off of that body right there. And this is for me personal preference. Main levels, I make solid lines, right? So where's the next point from here at the top that we bounce? Well, we bounce right here, up, right? So I'm gonna put another level right here. And where do we bounce up to? Right here. I'm going to put another level right there. Let me make sure this is going down to the lower. All right, this is only going to weekly, so we'll put it on weekly. And let me just redraw this real quick. Right, so this is the other area it bounced. This is the other area it bounced right here. And then I'll go down, and where do we bounce from the bottom? Right there. So in 30 seconds, I've just mapped out 4 major levels for INOD. Okay, so one of the questions was, where do I draw trend lines? Well, I start my trend lines at wicks. So I'll start here at this wick, and I draw down to the first pivot, which is right here. Right, you see these 4. You could pick the first one, you could pick the highest one. It doesn't matter. But what you want to do is continue to draw it through. So if I pick the first one here and I draw it through, you can see there's the breakout right there. And you had 1 failure, 2 failure, 3 failure, 4 failures, 5, 6, 7, 8 weeks that it failed at that level, at that trend line, until this one right here. This is the candle that I get interested in. Okay? This is where the character changes. You hear me talk about character change, right? This is the character change right here. Because you went from going from a high, a lower high, lower high, low, lower, lower, low, and now after this lower low, you're putting in a high and a higher low. So this is a character change. That doesn't mean that we're breaking out. It just means that, something has changed here. That's different than here, different than anything since this prior high. Okay, so what else do I do? Well, I like to look for the highest weekly close, and I drop an anchored VWAP on that. Okay, so look at how we could have almost determined, once this anchored VWAP is posted, you're tracking it here, right? And every time we come into it, failed, 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 failed. Right? And so now we continue to track it. It's not up to it. So what I would do is I would set an alert on that level, right? And TrendSpider, I'm just basically create an alert at this line, breakthrough touch, and bounce. And I'm going to say, INOD, testing, swing high, AVWAP. That's the anchored VWAP. I'll set it for like 90 days. I'll trigger it once. I create the alert. And that's it. Now it's a kind of set it and forget it. I want to know the next time we test this level. But you might say, okay, well, right now price is at $45 and the AVWAP is at $55, right? So we're still $10 away. Is there an opportunity maybe to get in a little early and trade up to the anchored VWAP? And the answer is yes. So how do we do that? So we go down one level, we go to the daily chart. And now I'm looking for different levels, right? So you see these main levels that I drew out? Those are the weekly levels. Those are the weekly levels that I'm paying attention to. And obviously there's big deviations when you go down to a daily chart, because the daily chart has five candles for every weekly candle, right? So you're getting 5 more data points when you go down one step to the daily chart. Okay, so what I generally do at this point is I start drawing more levels, right? And this is how I find my levels. This is like, it's not rocket science, but it does take practice, and you do need to train your eye, I think, to see these things, right? So the next thing I'm going to do is, the first thing I'm going to do after this is, okay, what other pivots do we have now on the daily chart? So here's one right here, right, around 40.95. And here's another one right here, around 47.64. Here is another one right here, around 60.05. Here's another one right here, around 79.83. Here's another one right here. All right, so now I've pretty much, in 2 minutes, I've mapped out all the levels to the upside on INOD that I'm going to pay attention to. So just to go over really quick, why did I select those levels? Well, for here, you had a wick and a body stopped right there, and then you had 3 candles that just reversed right off of that. Why up here, you had candle body end right there, you had a gap under failure, you had 2 candle failures there, you had 4 candle failures there, you had 2 candle failures there. So that's that level. Why this level? Well, failure, 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 support. So this is an SR flip right here. This is going to be at an important level. So maybe what I would do is make this, bolder, right? Or maybe I would, change the color of it, to red or something, right? Something to indicate that that's going to be an important level that we need to pay attention to when we come into it. Now, remember, after hours are off. We don't know that the move is coming. What else am I seeing? Does anybody see anything here? Does anything look interesting in this setup right here? Drop it in questions. Nobody? Come on. You guys have seen my... Yeah, well, definitely a base. Okay, yeah. Inverse head and shoulders. Right? Inverse head and shoulders. Here's your left shoulder. Here's your head. Here's your right shoulder. This is a reversal pattern. Some people might call it a base. Absolutely, you can call it a base too. For me, what I like to do is I like to get in on the right shoulder of the formation, right? I want to get in here, and I want to get in after the pivot. Okay, so how do we get in after the pivot? So then we go down to, let's say, a 65-minute chart. Let me actually go back. Let me make sure this goes to all time frames below. It won't, because it is. Okay, now it should. Okay, so now we're going to go down to a 65-minute. And you can see this is the price action that we're dealing with right here. So where do we get in? This is the entire right shoulder. So I want to get in when the trend line breaks. And where's the trend line? Well, here's your first wick. Here's your second wick. Here's your third wick. I'm going to draw through, and there's our entry right here. Right in that, right over this wick. If you want to get a little more tactical, I would look for a level to break, like a pivot level. Right, so I'm going to look back, I'm going to look back, and I'm going to say, it's probably right about here. Right, you had multiple wicks come into this level here on the 65-minute, here on the 65-minute, right? It failed, it backtested, it failed, it backtested, it failed, and then you had a gap right here. Really important. It gaps over resistance To me, that's a huge signal right there that this is an important level. And so it backtests the gap up, it bounces, right? It moves back up to the prior area of resistance, it fails. It comes all the way down, it fills this gap right here, and then it reverses again. So then I want to buy the break of 42.34. That's my entry. The problem with this entry is that earnings happens 5 days later, right? So you could get your entry here a week before earnings, and you're getting an earnings run now, right? So now you've entered here and you're up around 14% from that tactical right shoulder entry. You're up 14% going into earnings. So the next thing I'm going to do is, well, what's the expected move for the INOD earnings? If it's more than 14%, then I need to make a decision. If it's less than 10%, I'm running this into earnings because the expected move is 14%, or the expected move is 10%, but I have a 14% cushion. Now, does that mean that it's only going to move 10% in either direction? No, but the average tells you it probably is, right? And so I have a 14% cushion. Let's say it goes down 25% on earnings. Well, now you're down 10% on your position. You're not down 25% on your position. So getting in on an earnings run, really important, because now you're positioned for this move. Boom, right? And so now your 14% winner turns into a 75% winner. That's it. Yeah, I look at the implied move. Absolutely, you have to. Because you need to know how much of a cushion you have holding into earnings. Now, would I be buying options into earnings? Probably not, right? I'd probably go with shares, or I might buy options 3 months out close to the money, kind of like what Stock Talk did with Ring, with RNG. So that's it. That's the sauce. You know, in 12 minutes, that's the sauce, right? I showed you how to draw your levels, how to draw a trend line, how to look for bases, how to take a tactical entry on an inverse head and shoulders, how to play an earnings run. That's it. Any questions? And of course, this is hindsight trading, yes. But if you're smart, you build a watch list, you whittle that watch list every week down to a focus list, you look to see what has earnings 2 weeks out, you start looking for these tactical entries, and that's it. That's what you do. You know, I've taken this type of trade so many times, and sometimes it works and sometimes it doesn't. But I know that, you know, as long as I have a cushion going into earnings, I don't mind holding. Especially if I have a starter, or let's say 50% of the position that I want, because I could always buy the dip and fill out my position if it comes back down to my first entry, or if it comes back down to my average, or if it comes down to a level. Like, I think a good example is Circle, right? Circle has earnings tomorrow. Where was my entry on Circle? Actually, no, I'm not thinking of Circle. I'm thinking of something else. But, you know, I did buy the back test of Circle here at 115. Now, it does have earnings tomorrow, and I only have a starter position. So I need to make a decision whether or not I'm holding. I'm probably holding through earnings, and partly because of fundamentals and backdrop, like macro backdrop, and partly because I only have a starter position. So, but again, like, why did I get into Circle? Or why was I even looking at Circle? Because look at the wedge. And I was talking about this wedge for like a week. Like, you could have built inside of this wedge, right? And then of course it gaps up without us. I had to wait for the back test of the 236 here, right? I got in, I had two limit orders at 115-ish and then 112-ish. But again, it's kind of just tactical. Okay, just going to go back through questions and see if there's any questions? I know we were going to go through one other chart. We do have another 10 minutes. W bottom low consolidation. So yes, I do look at the implied move. Yeah, I mean, TrendSpider is an amazing platform. And you know, TradingView is also, yeah, I'm not going to try and knock TradingView. For me, TrendSpider speaks more to my trading style and my aesthetic point of view when it comes to charting. But also, I know the team, you know, I'm friends with the CEO, and their product development and their product map is like insane. Like, they've developed so much over the last 2 years. It's incredible. Yes, I am recording the session. Yeah, CRWV was a good example too. CRWV was a really good example of a channel break, right? You had a long, drawn out downtrend here, right? You had your high. Here's where you draw your trend line, right? Kind of comes close, rejects, doesn't come close. And then you get the breakout. And where did I get involved? Right before the breakout here, right? So if we zoom in, why did I get involved here? Because, you know, with Elliott Wave, you know, I kind of forecast that this was the bottom of wave 4. And then I saw the 1-2 setup. And I said, you know, this is probably setting up for a big move. And then we had an ABC retracement right back into the prior wave 4 area. Now, this was a deeper retracement, but it never goes below the C wave. So it's a valid setup. And what I look after this low is this high here and this high here. These 3 candle rejections right at 87.64. There's my entry right here. I could have bought the breakout. I could have bought the backtest. I could have bought the bounce. Either one of those 3 entries is valid. And how did I play it? On the break of 87, I took the 90 calls. When these 90 calls and this candle here, I rolled up to the 95 calls. That next day, I think I rolled up to the 106 calls. Then after that, I rolled up to the 118 calls, which went here. And then I think on this day, I rolled up to the 125 calls. And these are the calls that I think I sold a quarter into this move, and then it failed. But I had one set of calls, first roll up, second roll up, third roll up. So the third roll up on that first quarter, I made money. The last 3 went to 0. But let's say I took 100 contracts here, and then I rolled up and I took 20 contracts here, and then I rolled up and I took another 15 to 20 contracts here. You know, let's say I made 10 grand here, I made another 5 grand here, and I made another, you know, let's say 1,500 on that first lot, but then I lost 2 grand on the last piece. You know, 10 plus 5 plus 15, you know, maybe I made 15 grand on that move and I lost 2,000 on the downside, but I just lost profit, right? That's the way I look at rolling, right? I made a post about rolling in the journal. That's how I think about it. Now, here's what's cool. What happened after this high was made? I forecasted a pullback right to the wave 2 reversal zone, right between 100 and 102.85. Where does it bounce? It literally bounced at 102.50, right in my zone. How did I know? Because I just knew what Elliott Wave was telling me, that after the wave 4 low, after the 1-2 setup, you're going to get a second 1-2. That second 1-2 sometimes comes down to the 382 retrace. That was at 102.85, right? Let me delete that. Once I knew that this high was in right here, I took my fib, I drew from the bottom to the top, right? I'm just going to delete all the other fibs. I'll leave the 382 on. I'll make it bold, and there it is. Now, why did I put the wave 2 reversal zone where I did? because I want to get a tactical entry between the 50% and the 382 because I know that that's a strong area for a bounce. It could pull down it could pull down all the way to the 618, but that's not as strong as a move as I'd want to enter into. I want to enter in somewhere here, right? And so it didn't give me that much of an opportunity to get in because it bounced right at my level. And that does happen a lot with fibs. Well, look at the 618 projection right here. It rejected perfectly off of it yesterday and Wednesday, right? So how did I find that level? Well, I used fib projections. It's a different tool than retracement and expansion, or excuse me, a retracement and extension. But what I'm doing here is I'm taking I'm forecasting the 1-2 move higher, right? So if I go from low to high to low again, the 618 projection is 138.22, two candle rejections there. We break through 138.22, it'll likely go to the 100% symmetry move. And all that's telling me is from here to here, we're forecasting a move from the next low. Let me get this. We're forecasting a move from the next low here to the next high, which is a symmetrical move. And I always say, the market likes to move in symmetry. So that's kind of how I think as a trader, right? There's not that many traders that think like I do. And I'm not saying that to be, narcissistic or big ego or whatever. The thing is, I've learned from so many different traders that I've melded what I loved about their styles into my style of trading. So what I'm showing you is how I trade. It's not necessarily how you should trade, but it can give you ideas about how you can wrap your mind around how you should be as a trader, right? Like I have a certain type of psychology. That's going to be different than yours. And so I might be a little less risk averse. You might be more risk averse, right? I might be a more aggressive trader. You might be a less aggressive trader. And so your choices need to reflect how you think about trading, right? For years, I tried to, be a momentum trader, and I just kept failing at it. So then I just focused on being a swing trader, and I was really good at it. And then over the last 3 years, I went back to momentum trading because I learned options. And I figured, if I'm going to take advantage of this market when the market is really good, I want to be able to make a lot of money, basically. And the only way you're going to make a lot of money is using options as leverage and, trading momentum like I'm doing, or you trade like Stock Talk where you're doing 50, 60, 70 hours of research a week. You're finding the hidden gems and, you're hitting home runs every year. Or you learn kind of like how a lot of these US trading champions trade, kind of the Mark Minaviri camp of thinking, where it's not like Stock Talk's point of view, because Stock Talk is very much a fundamental style trader. The Mark Minaviri camp, they're more into finding those high tight flags, finding those true market leaders before everybody knows about them. And it's very technical based, right? And so you've seen me incorporate that into my trading style. Do I trade it exactly how they trade it? No, I don't. I incorporate the high tight flag into my style of trading using Elliott Wave, using Fibonacci, using support and resistance. And now if you add in a little bit of what Stock Talk does, where he's more thematic thinking, right? He's looking at kind of like Wayne Gretzky. Anybody who knows Wayne Gretzky, he was, great hockey player, probably the GOAT, right? Everybody considers him the greatest hockey player of all time. And there was a quote that he said one time where people were like, oh. And his quote was, I skate to where the puck is going to be, not where the puck is, right? So he's literally thinking about where's the puck going to be, and he skates there. And as traders, it's like we need to think about where's the market going, right? We know what the themes are. We know what the trends are. Now we need to dive deep into those sectors and find the true market leaders, right? How do you find a SanDisk? Well, you know that there is a need for memory, right? Here's your first high tight flag. Here's your first high tight flag right here. High tight flag, flag consolidation, you buy the break. Here's your second high tight flag, flag consolidation, you buy the break. Here's a third one, and here potentially is a fourth one. Now what they will say is, buy the first one, buy the second one, be very careful on the third one. Definitely be careful on the fourth one. Buy the first one, buy the second one, tight risk management on the third one. Really tight. We are in an accelerated move here. This is going to have a blow off top and move down, but we just don't know when, right? Look at what's happening with MU. It's the same story, right? High tight flag, boom. High tight flag, boom. Big move. Probably going to flag at some point. Here's 1. Here's 2. Here's 3. Where's 4? One more example. ALAB. I traded this one with you guys. Right here. Here's 1. High tight flag. Here's 2. High tight flag. And here is the attempt of a third, but it breaks. What's happening on ALAB now? Same thing. Pay attention. This all makes sense? We cool? Any questions before I go into the morning session? All right, I'm going to stop the recording here. I'll get this posted later today, and let's go into the morning review. It's going to be a different video.